Valentijn Van Nieuwenhuijzen is head of strategy at ING Investment Management, joins us from The Hague now. Valentijn, good to see you. So you're putting the chances of a recession at what, 30 to 40%, and it's rising. What's your rationale for that?
Well, I think one of the biggest concerns out here today for investors, at least for us, is the fact that every time we see downgrading of growth numbers, if we see lower GDP results, if we see lower high-frequency economic data, what you get in response from fiscal policymakers is another round of fiscal tightening. So we are fearing very much that this sort of austerity drive, which we're seeing all around Europe and the US, will push the economy back into negative growth territory.
So what does this mean if monetary policy remains accommodative in the US and Europe, so low rates in Europe, low rates plus possibly more stimulus in the US, that would stave off another recession?
Well, I would certainly say if indeed fiscal policy would shift from a restrictive stance to a stimulative one, that has a high probability of staving off a recession. I do not think, however, there is a very high probability of this happening. And of course, monetary policy has been pushing on a string for quite a while now, and maybe Ben Bernanke will in the end come up with something new here. But also there, it seems to be unlikely that it will be as an aggressive push as we've seen in the past. So for us, the policy response seems to be probably not big enough to prevent a slowing in growth.
All right, so we are seeing sluggish growth, higher unemployment. Those two factors have been in place for a while now. But on the upside, just for the sake of playing devil's advocate, I mean, we are seeing perhaps a little more appetite for risk coming back to the market. I mean, yes, volumes are perhaps not very high and it's still early days, but investors perhaps taking some heart from Ben Bernanke's speech in Jackson Hole. And then other analysts saying, you know, we're seeing the effect of the supply chain disruption from Japan's earthquake subsiding, plus the fact that oil prices are coming back a bit, and that could boost consumer spending as well. Are you looking at those things too?
No, absolutely. I mean, I would actually stress those two elements, the correction in oil prices and the fading of the supply side shock due to the earthquake in Japan, as the biggest two arguments not to be in the recession camp already. And let's be happy indeed that there is a somewhat better appetite for risk right now after the enormous correction that we saw during August. But that doesn't take away for us the risk that this revival of risk appetite could be relatively short-lived. And that unless we see an actual strengthening in the actual spending behavior of corporates and households, recession risks will remain high.
For Europe, how serious are the political risks at this point?
Well, I mean, these risks have been high. They have risen quite a bit, I would argue, since March, because, you know, remember at that March summit, it actually looked like we were moving on towards a track of more coherent policy in Europe. Ever since then, things have been falling apart, whether it's due to Finnish elections, Portuguese new governments, whether it's due to renewed funding stress in the banking system. It all comes together, and it's still a very incoherent story. And just the latest reflections from Christine Lagarde at Jackson Hole, of course, underscores this very much if you see the response from the different policymakers in Europe. It is very incoherent, not speaking with one voice still today, and that probably is continuing to result in a bigger cost in the end for us all.
Is there any one thing that could spark a double dip in Europe?
Well, I think obviously related to this, a renewed crisis surrounding the financial system and a renewed additional negative shock because of a failure, for example, of the EFSF to be ratified by parliaments. I mean, it is in that area still that the biggest shocks to the system can be generated, and given the starting point of already very sluggish growth, we don't need that much to be pushed into a recession.
But you do have other EU policymakers disputing what Lagarde said, saying actually, you know, banks have been building up their balance sheets. The situation isn't as bad as it seems, that actually these banks are in a better position now than they were a year ago. And I suppose you could also argue that worst-case scenario simply won't be allowed to happen, that you will have, whether it's Germany, whether it's the ECB, intervening to to prevent that. So 30 to 40%, perhaps a little too high.
Well, I wouldn't say so, but again, I might be on the pessimistic side of how much policymakers, let's say over the next 3 to 6 months, are able to achieve. I do think in the end they will not let the Eurozone collapse. And I do agree with your remark that there has been an improvement in the banking system with respect to capitalization. But the question is it enough for the big challenges that they're facing? And we have some doubts there, and therefore, you know, we are far from comfortable that renewed stress, whether it's in the banking system or just surrounding the whole sovereign crisis, will not re-emerge over the next couple of months. And of course, it's then a matter of how much pain is needed in financial markets before policymakers will be willing to make the big leap forward. But we think there will probably first be some pain.
Valentijn Van Nieuwenhuijzen, Head of Strategy at ING. Good to talk to you. Thanks so much for taking the time.